Good whip around Wednesday, everybody. Hi, Lori. Looking forward to talking to you in a half an hour. How are you, Richard? I mean, Bran. Capital letters, Mike Delfino. AJ, thanks, buddy. Okay, so tough to make a lot out of what's happening this week. I have noticed a couple of things, so we'll take a look at it. Let's see.
And good morning, Coach.
Hey, buddy. So it's nice to have internet.
Yeah. So yeah, I did not tell everybody what happened to you because we talked after the show.
Yeah.
So
Yeah, I just had an outage for a day. So you never know how attached you are to everything that we, take for granted every day till you lose it.
I couldn't even imagine like Steve living. Like Steve might go into like some sort of shock, I would think. Yeah.
I think people have tried it. It's we're very attached, and just a few things that I've noticed is like the 10-year. So we had a nice rally in the 10-year here. And it looks great when you look at it intraday, but if you look at it on the daily, this still could just be a corrective wave after this big decline. And the dollar didn't make much hay out of it. Euro moved sideways, cable came down a little bit, and we could be peaking up here and end up with something like this from here. I think we're gonna fail up here, and yields will start to drop. So what does that imply? Tech stocks, they're all using the reason of higher rates why tech stocks got hammered. And back here, me and my evil twin were talking 37 and a half. And then I started getting more bared up because of Apple. And Apple did break down that 130 level, but the market really didn't fall apart. So, and then I read Jim Welsh, and it tempered my bearishness. So I don't know, maybe we're going to have a little bit of a seasonal rally here going into early next year. Lower yields would help, and a weaker dollar would help. I still think I would try another short and pound up around 22 and a half or so next year. See if this was just part of, the first part of the correction, just like yields, and we go up here and then maybe down to 118. Is Grega here today?
I think he's coming.
Okay.
I think he's coming, but I think he's coming here in just a bit. I'm going to check in with him right now.
Okay. All right. So that's going to be great to get his counts, what to look forward to. And I know I've been the boy who cried wolf a few times, guys, on this wedge in the gold silver ratio, but it's still a wedge, and people are pretty bulled up, and they have good reason because price action's been pretty good. But I don't know, to me it looks like gold is levitating. Look at this RSI. How long since we've had a confirmed high? Goes back to Thanksgiving, right? So we've been making all these higher highs without, except for here, it tried to confirm, it didn't. And we're not confirming there. We're not confirming in silver. You could see divergence happening here. Could silver, push up towards 2470 or so on that line? Now it's probably around 25. I would just be careful because you have a wedge here and then you have a wedge here. So the worm might turn for at least a correction next year.
Yeah, Steve was pointing out yesterday an ascending wedge in silver, and I thought that was a really good look. And I'll show you when I take over the charts a little bit later. I'll show you that the wedge he's talking about. So it matches up perfectly with your gold silver ratio.
Yeah, and this thing has come a long way in a pretty short period of time. I mean, it was only Thanksgiving where, it was 84, and here we are, 15% lower because of the strong performance of silver. To me, it's just a warning of don't get too bulled up about silver right now. Yeah, I think you'll have better entries next year to get long. So that's pretty much what I see. Also, if the yields are peaking, then this will bounce in the yen, might be terminating. It's trying to reverse today. But, we could talk about all this, Blake, and it's in this holiday environment. Even though I see things that look the same when we're in, the candle is a candle. You don't know if it's a holiday week or not. I just can't put as much weight on what's happening here this week or what happened last week.
Oh, I 100% agree with that. I mean, that is like truly the problem, with the market right now is we are in a holiday week and there's very few participants. So you can't read too far into the price action. You just can't.
And what price action? If you look at euro, I mean, really.
I actually just got out of a long about 5 pips higher than where we're at on that spike to new highs this morning. I just got out of the euro long and I really mistimed it yesterday. I should have bought it a little cheaper. I was like, anyway, regardless,
it's doing.
I know we're in this range, so it's like, why did I buy it towards the upper end of the range? It still baffles me, but I took the trade.
Maybe. Well, I mean, it could work if the dollar is going to roll over and head back down to this wedge line again. 102. So I don't know. I mean, isn't it a guess to figure out which way the dollar is going to come out, either here or here?
Well, I think it is more 50-50 at this point, right? There's not a lot of data that's going to push us. There's nothing this week that's going to push us. It's all flows and it's all risk related. So what I'd be really focused on is how do equities act here. And there's a really interesting technical setup in the S&P.
Let's see it, buddy.
You want to see it? All right. Well, since you're asking, let me grab my glasses here. And okay. And by the way, what you see here is Tesla just getting destroyed, right? It's just been dragging down sentiment. Really, I would say sentiment. I mean, you've got, here we are at the 78% retracement. I think Steve, are you here? He might, I know he was been back and forth. So Steve's like, he was going to buy it. He's like, I'd buy it at the 60s or in the 60s. And the reason why is the big breakout point right here. I mean, it's like that seems like a doable level for a bounce, right? Somewhere like that. We are approaching the 78% retracement. Pre-market, we're up a couple of bucks, but you can see that 78% retracement is coming into play. Relative strength is so oversold. It can, and everything you see here could be more oversolder. So that's one thing you always have to keep in mind. It's not like super.
Look at that RSI reading. It's probably like 15 or something.
I would say it is around 15, but you know what? It could get cheaper. Yeah. And it could be more oversold. So that's, but it is definitely like trying to chase it down here on the short side is definitely dangerous. It's a dangerous game.
Tells me not to trust the first bounce because it's going to be a confirmed low. Yeah. You could still get a bounce, but
how many people bought it, here at 150? When RSI was oversold, probably a little divergent, said, well, we're at channel support, so I'm just going to go ahead and buy it here. I'm sure there's a lot of technical reasons, 161% extension, 127%.
Oh, yeah, I would have done that.
Yeah, I actually, one of my best friends called me and texted me and said, I'm buying Tesla. I'm like, oh, God. But, he did it. And he's like, okay, I got out of the way, I mean, how many people probably, stood in the way down here? Anyway, Tesla looks like crap. That wasn't the chart I wanted to show you. What I wanted to show you is the S&Ps, because we have, a woman's best friend. We got some diamonds here.
Oh, diamond formation.
Yeah, a little diamond formation after 161% extension. I was updating the chat room a little bit ago. Here, you can.
Are they classified as reversal formations?
They
Or
are. It
okay.
doesn't mean, you can see the diamond formation here. Which, we were, just, and you can see I was actually posted a chart on 10-year, the 10-year
Yeah.
bond market, which we're going to get into here in a second, because you made some comments about bonds, which I think are really important. So yeah, I mean, look, we hit the 161% extension. We're in that week where things tend to go higher. You know what I mean? I think you got to be careful, being on the short side. I've said that a lot over the course of the last 24 hours, actually since I think Friday. You just have to be really careful, especially if we get above 3,900. I think the risk is with equities. We trade back up here, towards the 200-day moving average channel resistance. I don't think we've got a lot higher to go.
Is that the measured move? Do you measure it by the width of the formation?
You do by the
vertically
width of the tip of the this on a breakout. So it should take you something like that, which in this case would be around the 200-day moving average.
What you're looking for.
And I think that's doable. I think if you have any expectations, more than that for us to get above like 4,100, I think it's a tough, ask for this market. The one thing that the market does have going for it, Dale, is there's a lot of bears out there. You know what I mean? So everybody seems to be universally bearish, and that's the one thing that I think the market's got going for it, is just sentiment is so poor. But that's
a great look. Great.
Yeah, thanks. It's not a reason to buy it, but it's something to think about. Hey, you were talking about the 10-year, and you were talking about the 10-year might bounce. And if it does bounce, that means yields are coming down. If yields come down, that means the dollar could come down. And so I want to take you over to the 10-year and show you one of the charts that I was looking at is a simple flag formation completion. We're at the 50% retracement. So I think there's a good chance, as you said, Dale, I'd agree with you that there's a good chance that we bounce. We bounce a little bit. Yields start to slip, which they already are.
Equities rally.
Yeah, equities rally. Dollar starts
off.
To pull back. All sorts of stuff.
We've got a case, man. Okay, right, everyone. We'll see you tomorrow. Happy New Year. We've got it all cased.
I think that's like stocks can come down, or stocks can, grind higher. This you have the formula, right? You have the formula that can allow for stocks to move higher. If you want some confirmation in FX land and in currency market land, look at the dollar Mexican peso. We've got a flag pattern setting up here. So this is one of those things that I'm keeping a really close eye on. I was just short for the last 24 hours. I just got out for basically break even. By the way, if you ever, curious, if you go to the trades room, I'm like myself, and I think K-Man are the only people that have been posting here the last 2 days. K-Man pops in like in between, visiting with family. You can see I, post where I'm in, where I'm out, just kind of took my dollar Mexican peso off. I closed my S&P here. You can see I bought it at 26 yesterday, closed it out at 41 this morning, just about where we're at. And I forgot to take a picture, which, usually I just take pictures of everything. But yeah, if you want to know, what I'm doing, you just go in the trades room. Anyway, I was short the dollar Mexican peso because, I am looking there. I'm looking for a bear flag. I don't know if we're going to play all the way out, but it's one of those things that's going to confirm that this equity market might grind higher. So if we see a move lower in the dollar Mexican peso, that would, suggest that we've got a good chance at the S&P, breaking higher out of this the diamond, right? So whoops.
I think someone said hello. Was that Grega that said hello?
Hey.
I thought it was Ryan.
What?
It's like a ghost. The ghost of Ryan is here.
Yeah.
How you doing, buddy?
Yeah, how you doing, guys?
Merry Christmas, Ryan. What's going on?
Eating too much, drinking too much, getting kids doing my nut, but apart from that, all good.
So what's going on? What are you doing? What are you doing here? Did you get bored with the kids? Want to come hang out with the other kids?
Yeah, I need to lock myself in the office for 10 minutes, get away from crappy Christmas films and stuffing my face with Christmas chocolate.
Thank God for elastic waistbands, huh, Ryan?
Oh, I've got my fat man pants on. I've had them on since about the 23rd.
That's funny. That's funny. So what do you see in your view? Like looking around, I'm sure you've gandered at the market a little bit. I see K-Man's nibbling around the markets. He's kind of in and out from time to time. What are you seeing that people should be looking at?
It's a bit difficult this time of year, isn't it? I mean, the dollar seems quite bid. Well, dollar yen does anyway. It continues to grind higher as yields have continued to grind higher. I suspect it might possibly be some end of year stuff. But I think it's like I said before we came into the holidays, you've got to take where we were sort of straight after the Fed and after all the central banks. And that's where we're likely to get back to, sort of thing, when we come back in the new year. It's value date in the month, I think, today. So it could be quite a busy fix being year end. So keep an eye on that. Keep an eye on the clock around the hourly numbers. If you see some funky moves, could be fix related. But yeah, I'm just taking a brief look now and again at markets, managing positions. Euro sterling's been quite nice, shifting up through 88.
Yeah, that breakout was pretty massive. I remember, Dale, we were here when it was at the ECB meeting, and I went long on F.A.C.E right there on this triangle breakout. Dale might have stepped away from the mic.
No, I'm here.
Remember I bought that?
Yeah.
I sold it here. That's because that's how good I am. I bought it here and I sold it here.
It's that classic rule: cut your profits short and let your losses
Yeah, I'm that good. So Ryan
I
is obviously a lot better because he's still long. So
serenity now. Who said that, Anthony?
Yeah, I'm still holding mine. Still holding mine as well.
You're still holding it, but are you worried about it here? Like this, I mean, today's price action is kind of ugly. I mean, if you're long, you're probably going. Well, you are long. I mean, how do you feel about it?
Yeah, I took a bit out just against those prior highs up in the 88s, 88.30. I think I just knocked some off. Me, I don't like to give up a winning trade anytime soon. I really don't know. We could get a run up to 90. Again, I just can't. I can't buy into anything this time of year. I can't, say, oh, this is going to 92 or anything like that, because we could come in next week and it's back down to 87s or something because the fundamentals are taking back over and that sort of thing. So yeah, just sit in the trades. I'm still short dollar yen. Happy to sit and hold in that one and sell any rallies in that still, because I don't think we're in any change position. The Fed are where they're at. The Bank of Japan is now potentially the game in town, as we know. So yeah, I'm happy to sit in my trade.
That was a great trade by you, and I know you got the whole room. Came in and you guys before the BOJ, and Blake was there. I mean, that was what a great Christmas. People that hang with ForexAnalytix had, because of
real team effort, that one.
Yeah, it was a great.
But it's that highlights that it doesn't matter how low a risk something is. A risk is still a risk, whether it's a 1% chance of a risk or a 90% chance of a risk, and you've always got to have that in your back of your mind, because it's those moments when the 1% risk happens, you can either make a lot of money or unfortunately you can lose a lot of money. So you've always got to be planning for that sort of thing.
Yeah, that makes sense. Hey, I was just reading here, and this is going to be a swoon for obviously the sterling and the euro. Natural gas prices in Europe are at pre-war levels. Dutch front month gas futures continue to decline heading into the end of the year, hitting 77 sterling it's megawatts, which is the lowest level since February 21st, before the war of Ukraine started, amid mild weather and ample supplies. So, I mean, are you guys like sunbathing over there in the UK? Is it that warm?
I wish, but we're still going to get price increases in January because it's when they buy their fuel forwards, so we're still playing with the high prices. So it's going to take a while for those to feed through. So maybe, first quarter next year, we'll start to see those price decreases that we've seen in the major markets, energy markets, kicking into the retail side of things, the household side of things. So it could be a while yet. Obviously, we've had Putin now saying he's not going to sell oil and oil-related products to those who impose the price cap. So we're definitely not done and dusted with all this sort of stuff.
And winter has just started.
Yeah.
Right.
And it's also,
people are.
Yeah, actually, winter has
got a
just
few
started.
months left.
Yeah.
Exactly. And Europe is still paying a premium to get their gas from elsewhere because they're having to ship it in and that sort of thing. So while domestic markets may be something, you order a tanker of gas from the US, it's still going to cost you a pretty penny.
My gas bill, I don't know about yours, Blake, is about 25-30% higher this winter.
I don't. Oh well, we don't have gas in my neighborhood. That's it.
Oh, okay.
That's why I don't know. I haven't had gas in like 5 years. Well, yeah, we don't need it in this where we don't need it where we live. Our neighborhood specifically does not have it.
Electricity heats it. Your house?
What's that?
What heats your house?
Electricity. Yeah.
Oh, no, not this time of year.
And we burn logs. So.
Oh, okay.
But yeah, that's you make a great point, Dale. It's really winter just started, and I told that to one of my kids because we were over Christmas. It was like 70 degrees here. I mean, it's cold today. Nice. It's well below that today, but over Christmas it was like you're wearing shorts and getting a suntan outside and
thanks for that, Blake. See you later.
Yeah. But my son was like, he doesn't like it, and I don't like it either. When the holidays, that's the weather. You want it to be, snowy or dreary or I don't know. I think that's more holiday weather. Anyway, regardless, I told my son, it was like, yeah, it was the first day of winter, like just a couple of days ago. He's like, whatever. Seriously, but it is. Anyway, yeah. So Ryan, like, as we head into this new year, I wanted to ask you this because we haven't really talked about this. And Dale, you can think about this too. And Steve, are you here, Steve? Steve, by the way, has been taking care of his son, so I'm not sure if he's here. But Ryan, what are you looking at going into 2023? Like, what's your like, I don't want to say best idea, but how are you going to approach 2023 and what are you thinking?
Yeah, just to try and give it a broad view. I think the biggest factor we're going to be playing with in the early part of next year, especially, is going to be central bank divergence. Everyone's still hiking, but they're getting to their limits now. So it's going to be this switch to when are they going to start cutting, how bad economies are going to get. You've got a perfect example in Aussie Kiwi, that pair, because of the divergence between the RBNZ and RBA. And I think we're going to start to see more clear trade. So I think the crosses are going to need watching, especially between those different currencies. And yeah, I think it's going to be the market pushing the when is everyone going to start cutting and how bad the fundamentals might get. Who's going to be the least clean, dirty shirt, that sort of thing. The same thing as we had all last year, but the opposite direction now. So the US, is it going to be a soft landing? Is it going to be a hard landing? I think we're going to start finding out in the first quarter. And that's going to dictate what we see in the dollar and a lot of other pairs. And that's going to be my focus going into the new year.
And what's so important? Go ahead. Oh, go ahead, Sorry. Dale.
Oh, I was wondering, Ryan, do you think the dollar will rally with risk off if we're going to have that sell off?
Well, that's another thing. Are we going to see a complete change in what is risk off and risk on again? It changes so often. If the US is heading for a hard landing, that's going to be risk off. You're going to think that the Fed's going to, hit the brakes, look to cut later in the year, whatever. What's that going to do to stocks if the US is hitting a real bad patch? Are stocks going to start reflecting the fundamentals? We're not getting QE, no matter what anyone says, because that's an emergency tool. They're not going to start pulling out QE for a bit of economic weakness. But if the US is heading for a soft landing, could that be another boon for stocks? Because Europe might suffer worse, rest of the world might suffer worse, and the US is the best place to park your money again. That's going to be the differences we're going to be trading next year.
You know what's interesting? Blake showing the VIX, and I know some smart people
that's a big right there.
that are talking about a squeeze of short volatility. And you look at January of last year, maybe it was 17, and that was all-time highs. And just a week or so ago, we traded like 19 after a 25% sell-off in the market. So is VIX undervalued compared to where the market is? I think yes. So, just compare levels of where S&Ps were when the VIX was trading around 20, and there you could find many higher levels, much higher levels that the market was trading at with the same reading in VIX right now. So I don't know what it means. To me, I'm guessing that I should be accumulating,
hedges.
maybe some VIX calls.
Yeah.
It's a terrible market to trade because almost every product has, every ETF has almost degrades like an option, especially the double ones. So not easy to trade.
Yeah,
you can't see this dipping too much. You still got these ongoing tensions, Russia, Ukraine stuff. We've got the China, Taiwan stuff.
Yeah.
That's I think it's going to start bubbling again more so in the new year because that hasn't gone away, and that's going to keep volatility high, I think.
Well, it sure hasn't. So that's what I'm saying. At 20, something's mispriced here.
Yeah.
Good point.
I personally think equities are, and I think they should be. I think equities will probably be trading closer to like 3,400 over the course of the next couple of quarters. I think that where stocks are right now, I don't know if they should be sold today, but I think they should be sold in the next couple of weeks. And as we head into the new year, I'm going to be looking for entry levels. I'll be looking for reasons to be a seller. I just I don't know if today is the day that you really want to be short the market, right?
Yeah. Okay. Well, that'll take the VIX back up to 35. And if we ever break out over 35, it measures upper 40s to 50. And that would be the clearing event that everyone's been talking about. We haven't had all year.
Yeah. One of the things I just want to mention this really quick. Grega Horvat was supposed to come in today. He checked in with us yesterday. He's not around. He's
there.
Also. Wait, there. Is he here?
Yeah, he is here.
Yeah,
dude, Grega, where you been all day?
Yeah, I'm listening to you guys.
Well, we got I know Dale's got his guest. I thought you were. I figured you were off with your kids and you were going to come in tomorrow. But
kids are on the other side of this door. So yes, they are here.
You've locked them out as well, have you? You're hiding in your office.
That's what Ryan's doing. That's funny. All right.
My kids with his friends, so it's pretty.
Take us a little bit through some Elliott wave counts that you have in the markets and what looks interesting to you. And I know Dale's got his interview. I think he's got his guest here, but take a couple of minutes just to kind of show us what you're thinking.
Actually, I've been working and looking at some ratios over the last 2 weeks or so to prepare some of the charts for 2023. And what I see is that at least in the first part of 2023, I think that the US dollar could be headed even lower. And here I will show you a few ratios that I think that are very important when it comes to US dollar. So firstly, we have dollar versus the 10-year US notes. And you can see that we have seen a pretty nice and strong impulsive recovery, and looks like that we are now completing this impulsive rise up from 2021 low. So in my opinion, we are just, even if we are in a temporary setback, I think that we can retrace back towards the levels from 2017. So I think the treasuries could see more upside versus the US dollar. Okay, so I think that the US dollar could be making some much lower prices. And I think that, as we also shared some of the charts last time, I think that the US dollar index potentially has reached the top. And here I also have dollar index versus the S&P 500. Now this one is pretty interesting because I'm looking at two wave counts, okay? So I'm not sure if that was an impulsive rise or maybe even corrective rise. Sometimes the substructures are not that clear. But what is the most important, at least for me at this stage, is that in both cases, we have seen a pretty strong drop from the recent highs. And so far, that has occurred only with one leg. So even again, if we are just in a temporary setback here, we still should see a free wave drop. So in that case, it means that the S&P 500 should outperform US dollar index. Even if that's a 5-wave rise and you're now in a corrective phase for the 61.8 or 78.6 retracement, or even if, let's say, the S&P 500 will continue back to new all-time highs and we will see dollar index much, much lower, even this one also suggests at least temporary weakness. So I think that the US dollar itself suggests that potentially we have reached the top. Here, I also have gold-copper ratio, which, as you know, it's a ratio that measures the economic health. So if we are seeing gold-copper ratio moving to the upside, it means that a lot of traders are looking for move into the safety. But what I see here is that on the cycle top, notice that these red lines, right? That we have seen quite nice recovery here on this gold-copper ratio, but we have moved to this cycle top, which makes sense because the S&P 500 has made a pullback. But I think that this year on the S&P 500 has been a move of a correction. So I think that this gold-copper ratio could actually move to the downside. And if that would be the case, it could be supportive for stocks. So far on stocks, we have seen a pullback of a 25%. A lot of traders, analysts would expect a retracement of a 50% because that was the case from 2000 highs and 2008 highs. But what everyone forgets is that when we breached those highs, the market made an extent of a 200%. So the current 25% could be enough of this pullback if we consider the previous retracement with the recent very strong extension to the upside. So in my opinion, I think that we are potentially reaching a pretty nice potential support here on stocks. Also, I have here a really quick one. I have a put call ratio that's actually on the bottom of this chart. I have an inverted, it's actually call put ratio because just too easier to read the correlation with stocks. And notice that I have here in the middle, the moving averages of this put call ratio inverted chart. And why I have moving average? Because it's much easier to read the price data. And notice that we have once again moved to this extreme here over the last few weeks into the extremes while the price is still holding the previous low. So in my opinion, there's still a lot of concern that potentially stocks could drop further. But as you know, if this is moving into the extreme readings, well, most likely we are probably moving into the end of this phase. So again, it looks like that this could be supportive for the stock prices and that market will not be that bearish if everyone expects that price will drop further.
Lower yields, lower dollar, higher equities is
well, actually, I have here also, this one is also interesting. I think that when looking at US yields, I would say that we are now in the period of consolidation, okay? Maybe something similar like we have seen here for 2021. So if we expect that Fed fund rates will basically maybe stabilize in the next few months, in the next year, then obviously maybe the 10-year US yields will also stay sideways here. And as you know, this could make a very easy case then for the S&P 500 to break higher. Because here, when we had this very nice period of consolidation for a wave 2, the S&P 500 continued to the upside. If you're now just expecting more consolidation here for a wave 4, I think that also the S&P 500 could outperform the 10-year US notes. And also keep in mind that this appears to be like a very nice potential wave for here as well.
Okay.
Awesome. Thanks, Grega.
Great look ahead.
Thanks.
From the Wizard
Yeah, that was a very
Slovakia.
quick. That was a very quick 5-minute update.
The Wizard from
That was fast.
Slovenia. Yeah, that
Yeah.
was great. Okay. Well, team, I'm going to bring Lori on now. Thank you, Grega.
Thank you.
And
Thanks, Coach.
yeah, thanks, Blake and Ryan, for dropping in.
Cheers,
And
guys.
Lori,
Have a very happy new year.
Happy New Year. This is going to be our
You
best
too.
year ever, Ryan, in every way.
Hope so, mate.
Declare it. All right. Lori, welcome back to F.A.C.E.
Good morning, Coach Pinkert. How are you?
All right. Well, I have a few injuries in the lineup, but it's next man up, and and that's you, Lori. So tell us what's top of mind for you now going into the end of the year, and what your plans are, and things that you're looking at. Oh, there's that diamond that Blake showed.
I was
Okay.
so glad I was able to tune in a little early because Blake was tracking with exactly what I was thinking. I've had this 12-hour pattern on my radar, even
Nice.
back in here where we had the bear break without a lot of follow through, and we have an equilibrium setting up to the right side. Just a classic diamond bullish reversal pattern. Overall, I'm leaning bearish. This pattern is not enough to get me bullish today. However, it's something I make note of, and I say, okay, my thesis is bearish, but this is just something I want to keep in mind so I stay as open-minded as possible. So I definitely wanted to just follow up because Blake and I are tracking. This is something I'm watching for the day. And then a couple comments to add to what y'all are saying with the dollar. We are on our second weekly inside bar. And I can assume that you're seeing my charts okay.
You can
Perfect.
assume it's correct.
Okay. So we're in our second weekly inside bar, and we know with equilibriums and tightening patterns, volume dries up, and we're already in a low volume, low liquidity environment with the market as a whole because of the holiday season. So those inside bars create misdirection on lower time frames. So if you look at the hourly, it's an absolute mess. Look at this. Higher high, higher low, lower high, lower low, just all over the place. It's probing liquidity to the upside and to the downside. And if you will just bear with me in my Louisiana analogies, it's kind of like the drunk girl walking home from the bar in high heels. She's wobbly and she's all over the place. That's what inside bar price action is on lower time frames. You get those misdirections as they just probe liquidity to the upside and to the downside, trying to find where are the buyers and where are the sellers as they're just in this low volume environment. So
what do you think? Do you have any kind of bias in the dollar going into next year? I want to bring up inside weeks. I actually like them because they set the stage for outside weeks. And,
absolutely.
Right. So maybe that's what we should be looking for next week. 2 inside weeks, and whichever way it comes out of those ranges initially, see if they could turn it for a reversal candle. So
a pop up above and fail, or pop below and fail.
Right.
And yes, that's absolutely. And I'm watching this RSI trend line. We're kind of stuck right here below 40, and RSI stands, as you know, relative strength index. We want that over 50.
I renamed it.
What is it?
The real simple implicator. By implying either confirmed highs or divergences beginning to develop. So
absolutely,
that's what it means to me. It's real simple implicator, which isn't even a word. I got a misspelling on it.
I was going to go with it as if it was a word. I was going with it.
All right. I use it. It's in my.
I use it simply. Over 50 is, we obviously have emerging strength, and the dollar cannot get over 50 on the RSI on the daily, cannot get over the 8 EMA. But if you look at the TTM squeeze indicator, which I like to use, you can see that this bear strength is waning. So the bulls are putting on a fight. I'm not saying that they're winning, but they are.
I never heard of that indicator. What is that indicator again?
the TTM squeeze indicator is developed by John Carter, and it is when the Keltner channels go inside the Bollinger Band. So if I were to have my Bollinger Bands on here, let's say Bollinger Bands, and then the Keltner channel comes inside the Bollinger Bands, you have the squeeze action. And then when it pops out of that squeeze and compression, you typically have nice follow through to the upside or to the downside. I trade a lot of options, so I want to know when pressure is building. You know, it doesn't take a rocket science to figure out that pressure is building. I just reversed my indicators, but that's okay. Here, let me draw my little thing. If you see these little red dots, we have that pressure building, that Instapot. And when it comes, that pressure is released either to the upside or downside, you can usually get some really good follow through. And some of my better trades are using the squeeze indicator. So that's definitely something I'm watching. And the other comment I wanted to just dovetail is VIX is absolutely, I agree with you completely. It is totally disconnected from the market. I use this table. I do the pregame show every morning free on YouTube. And the way that I can communicate to the audience is I created this table. And these weightings are arbitrary based on my trading experience. And I understand that, you know, the dollar may be more important to someone else versus, you know, bonds are more important. So this is just from my experience, what I am looking at and how important I think it is. And then I just give a check mark. You know, are we in a weekly uptrend? No. Daily uptrend, no. 4 hour, we're in an uptrend, but lower high is expected. And so you just go through all of these different markers, and overall, it just assigns some objectivity, so how I can communicate my thesis. And so overall today, I'm leaning bearish. Hang Seng was up overnight. DAX last time I looked was flat. Let me make sure it's still flat. Yeah, pretty flat. So overall, I'm leaning bearish for the day. And the four pieces of information, I like to call it I take my meds every morning, market environment dossier, is what four things are really important for me today is that 4 hour, we're in an uptrend, but a lower high is expected on the market. We have that diamond bullish pattern potential on the 12 hour. Tesla is a potential possible vol climax. We have twice the amount of pre-market volume on Tesla today than we did yesterday. And then SMH could, and semis are important. For me, I say semis are the fuel behind the market engine. Let me pull up semis here.
I agree.
We have a look. Oh, good. That makes me feel better about my assessment.
And if we get a cooling off of this recent move in yields, it should be supportive.
Absolutely. The yields have been really just whacking the NASDAQ because the NASDAQ has the tech companies that have the largest amount of debt on their books. So high interest rates do not behoove the NASDAQ technology, semiconductors. It's a headwind for them for sure. So I drew this on a higher time frame. So don't send the trend line police after me, but this definitely has falling wedge type behavior, lower lows without follow through. So I'll be watching this today. If semis can find a bottom, I'd like it better if it could fill this gap right here at 19739. You can see I have a little alert set right there at that level. I want to know if that is filled, and that may be the area to search for a bottom. So Tesla and semis, I am watching very heavily today. They're highlighted.
Be more bullish if it didn't fill it.
I would still be
waiting for the fill.
Everyone's waiting for the fill, correct?
And it may not happen.
It may not happen, and we have another fill here at 186.10. So we still have other gaps to worry about, and Tesla does as well below. I'm not in the predicting business. I just follow price action. So I'm watching for this potential gap fill to mark a temporary bottom in the market if Tesla can find a bottom, because we have to have every single sector pulling bullish to help offset what semis and Tesla have been creating and causing to the market. All of this bearish action from these very large, I like to call them the generals. Everyone else has to be pulling the buggy toward bullish if these, we're going to have laggards in semis and Tesla.
What about Apple?
Apple, let's see. Apple is super important. Of course, it's the largest, and I'm watching it. We hit 12872 yesterday. I'm calling this a monthly double bottom in this equilibrium. I'm not saying it's game over for Apple bulls, but they really need to fight to defend that low yesterday, 12872, for us to remain within this monthly EQ, and that could give a little bit more bullish flavor to that 12-hour diamond pattern if Apple could do that.
Yeah. Okay.
And the other thing I'm watching, just to show you, is we have a broadening formation on the Dow. And the Dow led us here. The Dow has absolutely led this bear market rally or whatever. I can't stand labels because to me, it just gives you some type
the
of bias.
advance. So then you could just say the advance.
I like it. That's what I'll start saying, the advance. The Dow definitely led us here. However, it's running into this broadening formation trend line. I don't short trend lines. I wait for price action to confirm, but this is something I am watching. If they led us to the upside, maybe they could lead us to the downside, looking for a potential bear break in the Dow. I've played this bear break back here. I posted my entries in our chat room live and exits. Just we had this price action once we broke 34325. I entered short, covered my puts down here, and I'm looking for a re-entry on Dow puts.
Okay. How about silver? Everyone's very bulled up with silver and gold. Do you have a view?
I do. My view is it's a rising wedge, the same thing that Blake was talking about. I think it looks better on the 12-hour. Yeah, on the 12-hour here. Let's see if I can.
Would you short it?
Absolutely. And however, with a caveat, knowing that dollar hasn't chosen a direction in its life. So I would short it, but I would short it with one eye on dollar and one eye on silver. But I definitely think the falling wedge that you were showing earlier on the silver gold silver ratio and this rising wedge, I think that this is a great short.
Okay. All right. So you want to tell us, you're excellent at expressing your technical views, Lori. So you teach people. You want to talk about what you do every day when you're not here in F.A.C.E to help people in what's a pretty difficult environment. Let me ask you this. What kind of year did you have this year? And you don't have to give me numbers, but most people I talked to had a fairly difficult year trading in this new regime.
I will admit, and by the way, anybody that you follow, if they don't admit that they have losses, the person you are following is probably not telling the truth. I struggled at the beginning of this year adapting to the bear market because I was in such a bull mode. So I would say January through April, I struggled and I was overall red. And then in May, I embraced what price action was. I like to say, when a chart tells you who it is, believe it. It was telling us it was bearish and I wasn't believing it. And once I embraced that, that changed my trading for the rest of the year. So I'm definitely up on the year. I'm actually having a better year than I did last year.
Congratulations. And really appreciate you coming here and sharing your views and some interesting indicators, a squeeze indicator. I've never seen that before. What's the best way for people? And in fact, you have some fans here already in the room that watch you. So
I haven't been monitoring chat at all. But if you want to follow me on, let's see.
They think you have a great sense of humor, which you need in this business, don't you, Lori?
I think you need one. Absolutely. They're such a poor judge of character out there, my fans. Just kidding. Just kidding. If you want to give me a follow on Twitter at ChartGalLori, that would be greatly appreciated. If you want to check us out on chartguys.com, I do a free video for 30 minutes every morning where I rip through about 25 charts in 25 minutes. I go over indices, commodities, crypto, movers and shakers of the day, efficient use of your morning. And my goal is to get people ready for the trading day. I like to say I point out fishing holes and you got to bring your fishing pole.
Like it, Lori. And is LSU in a bowl game?
Oh, my husband was asking me that yesterday, and I am embarrassed to say that I don't know. They should be. We
had a great comeback this year.
Yeah, we had a great comeback. So I will post it on Twitter today if we have a bowl game. I'm a terrible fan.
Well, I want to wish you and all your followers a happy new year, Lori, and that 2023 pips rain down on you and all of your people.
Thank you so much, Coach Dale. Thank you for having me, and the same to you.
All right. You could find Lori on Twitter at ChartGalLori, and you could tell she knows her stuff. So if you like action, I think Lori could provide you with multiple ideas daily. So thanks again, Lori, for being with us, and I'll talk to you in the spring.
That sounds wonderful. Sounds great.
All right, so that's a wrap, everyone. I do believe the team is still doing the morning edge during this holiday period. You could catch them in about 25 minutes. And remember, no matter what you're trading, whether you're squeeze or you learn to embrace, like Lori did, embrace the new trend of the market, don't forget to embrace the people you love and tell them that you do. They're not mind readers. Adios, everyone. Don't just count your pips, count your blessings. See you for the next couple days to wrap up the year. Adios. Thanks again, Lori.